Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves just one question: what happened today, and what might it tell us about the coming ones? I do this show 4 times a week, Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. You can subscribe anytime I push content. It comes right to you. I also do a weekly show every Sunday evening. You might want to check that out. It's a little bit broader of a perspective. We try to look a little bit farther out using the weekly charts. As far as these markets, what are they doing? Well, it was an up day. If we pop in here and look at the data, we got 147 on the Dow, basically 12 points on the S&P 500, up to 2117, pushing back up towards those targets. Remember, the ABCD structure gets you up to about 2131, so that's the target we're looking for. And then above that, which is what some of these others are already going after, is range breakout targets. NASDAQ over 5,000 again. You're going to hear that a lot, right? Big number, big round number. It's over, it closes over it. Elsewhere, what happens? Gold sells off, bonds sell off big, 2.6 points, 2%, huge sell off there. Silver as well. Oil was actually down on the day, came bouncing back. Oil just doesn't want to stay down. And actually, I didn't even see it bounce back today. And I'm glancing at the chart here as I'm talking, and yes, indeed it did. So that was kind of an interesting one. And the dollar, it looks like the dollar got over those highs. We'll have to look at that and see what that looks like. Let's pop to the charts though. Let's see what's happening here. And what we have happening is another push, right? This market, well, let's look back at it here together. You come off the bottom in February, first day of February, right? You get a little pause here, spring up to another one, little pause there, push up to another one, little pause here. Is it going to spring up here to another one? Right? Are we going to see that continuation? Those targets I was talking about, the ABCD structure that's in effect, is from here to there and up, and that takes you up to about 2131. Is it going to get that little spurt up here to take us to that number? It certainly looks like that's what it's trying to set up to do, and the reason it looks like that is if we go over and take a look at what's happening elsewhere. For example, if we push up the NASDAQ, volume expands slightly, we get over the highs, and this one, if you take those same sort of consolidations that you saw in the S&P 500, this was a quote-unquote consolidation. This was a quote-unquote consolidation. The only real consolidation was back here when it was still trying to get over that swing point high. This one, already broken over the ABCD structure, right? That pushed up to it already, and now it's extending beyond it. It's extending 2 to 3 bars on the weekly time frame that we've talked about before. It's on bar 3 now, trying to push that up. And then if you take the range trade breakout and take the full range, right, and then project that range forward, and so you basically just double it and say, okay, where's that going to go? Well, you can see this still has a ways to go if it wants to go hit it. And if you want to get those numbers, just take the bottom of the range, 45.47, take the top, 48.14, get that number. It's about 267, it looks like. Take 267, tack it onto the high here. That's what the range is trying to get to. I believe that number's around 5,100. Looks like about 50.82, I believe. So that's the projection. That's where this thing is trying to go. And, you know, it's almost there. It's not that far away when you look at it. So you got that happening here on the NASDAQ. NDX has the exact same story going on, right? Big range breakout. It's trying to project up to its range. Now this one actually did a consolidation, and that consolidation was not a bad one up here, and now it's pushing out of that, right? Volume expanding down here, off to the races again. Folks, when they get it going, and you get this kind of a move, you're not going to get a large pullback off the first move, right? They're going to stretch and stretch and stretch, and then you're going to get a larger pullback, right? But initially, they just don't give it to you, and that's kind of the way this thing's doing. Let's look at the Russell. If we take a look at this one, here you've just climbed up. Remember on the NASDAQ, it was 10 out of 11 days, or 10 straight days up. Then we had a small pause, and then it started off again, right? And I guess we're up 2 or 3 days now. Here, you actually had an over-under higher volume, and what does it do? It shoots right back up there and gets over it, and it keeps extending up. This one, like the others, doing its range trade breakout, but the first target it has is short of that. Just like the S&P, it has an ABCD structure that it's trying to complete, and that still has a ways to go on it. So when we look at all the indexes, right, the indexes don't look too bad. The question is what are the sectors doing? What are the world markets doing? And how do those play into what we're seeing here? We'll take a look at that when we come back. But first, let me give you some information here about the site.
Do you have retirement funds you want to keep invested, yet you constantly worry about a potential market crash? As LA says, you shouldn't worry about a crash until it's time. Through LA's extensive research, he has identified the key characteristics that are necessary for a market crash. In the 2008 crash, for example, our investors actually made money and avoided huge losses through LA's investment advice. Because the markets usually go up, our retirement service keeps you invested when risk is low and reduces your exposure when risks become elevated. There are 3 portfolios you can follow: aggressive, balanced, and conservative. It's a simple process at a reasonable cost that requires very little of your time. To learn more, go to our homepage, hover over Retirement Service, and click Get Started.
Well, welcome back, folks. If we take a look at what really was moving things today, it really was in the stocks. We had a couple M&A deals that were taking place. One of them had to do with NXPI. That was a takeover, or actually a merger, with Freescale. We had another one with HP. HP was acquiring Aruba Networks. So 2 big deals in the tech space really got the stocks and the chips running, and they pushed on up. And actually what was surprising wasn't the fact that they pushed up, but I was asking the question last night, usually when you break over a swing point high, you get 2 to 3 bars. And I was wondering, can this thing get 2 to 3 bars? And I'll be darned if we don't get the big day up to start the week. Probably going to get the 2 bars, maybe 3. And those breakouts on multiple swing points, you see them breaking out on this time frame. That was here, right? And then it was on the weekly as well. Got the 1 week extension. Now here comes the second bar. And that rule, again, gets back to some of the research that I did when I wrote my 3rd book. And that was, I saw this pattern that applied over and over, where when swing points line up on multiple time frames, you get large moves when they're broken in the direction of the break. And that's exactly what we saw taking place here today in that SOX. Looking elsewhere, the other big move was the other way, and that was the XLE. The XLE was pulling against the S&P all day. You got some big names in here still struggling. If I look at that, though, and the way it's coming back, it actually looks like it's going to find support here. So the XLE doesn't look terrible. As it comes back into here, it tests into this area, finds buyers, flips back around, does a little bit of hammer. So the XLE is just, working sideways basically. XLF, this one's still trying to get over these highs. So the XLF has come up, gone sideways, trying to get over the swing point high, hasn't been able to do it yet. You're building up a lot of stops up in this area. And so when this baby breaks, and it could be as soon as tomorrow, I suspect you're going to see it shoot right up here to these highs and be testing those. So that's the XLF, and that one may start kicking in to help that S&P go meet its target. We talked about rotation last week. We were wondering if we were going to get rotation. And as we came back to do retest regenerates off these prior highs, right? They come right in there, and what happens? The buyers come in, volume surges, coming back up here. It's going to test this high and more than likely get over it. That's one of the rotation areas there in the XLI. We had another one going on with the well, it was the SOX was part of that, but what was the other one? Oh, XLV. The XLV was also doing the same thing. The XLV did not even pull back. Surges today back over the highs. XLV's going higher. This now has set up a fairly large ABCD structure off, guess what? Multiple swing point breaks, multiple time frames. That one's heading higher, and that's a big part. XLV, XLI, XLK, and XLF are your four major sectors in the S&P 500. Those four, the only one that's not so much struggling, but that's overextended is XLK, even though it was up again today. You need the others to kick in. We see it happening in two of those sectors now. If XLF breaks out, S&P is going to run quite a bit higher. So sector-wise, looking pretty good. If we go over and look at the OX markets right quick, over here, let's first pop into the dollar, because the dollar actually got over those highs today. I want to see what kind of volume, 2.2, 2.3, but it closes over. It looks like 25.21. It's over it. So it's going to be another reconfirmation of the bullish trend to the top side tomorrow, and it's going to be a question here of can it hold. If this holds, and unfortunately for the bulls in this group, the weekly, doesn't have 6 bars, so you're actually breaking out before you get a swing point, so you're not going to get a multiple time frame breakout. I think this thing's probably going to come back, but it's pushing decent volume. If this starts to leg away, that's going to be an issue more than likely for the markets. Popping into the equity markets, popping into the oil market, we can see it tried to push down, held. That thing's still holding this Feb 4 bar, and that sure looks like it's gearing up to try to shoot back up, doesn't it? And that also would jive with what we just saw in the XLE. Looking at the bonds, now the bonds had that counter trend rally. I talked about it last night, said there wasn't enough information yet, to tell us what was going to happen here. We had pushed back up into this big resistance bar right here, pushed back up into it. We didn't have the volume on the way. The sellers did come back in, pushing it back down, and that push now is setting up the potential for a large ABCD structure to the downside. So if you're in the bonds, just recognize if this swing point low breaks, right, then you're going to be heading back down. And if I pull the weekly over here, let me grab this number. That low is 123 roughly, and over here, yeah, it's this one. So this low is that same low on the weekly. So this becomes a critical area on the way down, and the reason for that is if you break underneath here, you're going to have multiple swing points breaking on multiple time frames. So it's still a good piece to go. We'll just see how it behaves, but right now bonds look like they want to go lower. Typically that means the equity markets are going to try to work higher, which also makes me think that dollar is not going to just take off. Gold couldn't get started, ends up reversing, coming down. I was asked about it last night. I was hedging my bets, saying that this is still a downtrend, and until it proves that it's not, you got to believe it's still one, and it still looks that way. Let me see what the FXE did. Okay, so that stretches a little bit farther to the downside, and the Japanese currency, pretty good push to the downside. So if I had to, say, okay, where's the risk in the dollar going higher? It's really in this currency. You got all these swing point lows laid out down here. This thing's been consolidating for a while. If I pull over the weekly chart, for example, you can see, where it's been consolidating down here in this area. Now it's coming back down to try to test. A break of this after a consolidation, right? If you come back up here and look at this, first you had the range up here. Then they did the QE program. You get a spike down, consolidation, big spike down, consolidation, or are we going to get the push farther? This is going to go lower. Abe and the Abenomics nonsense that's taking place over there is not going to stop. And they're going to take this to infinity and beyond, right? I mean, they're going to take this down and take it down deep before it's done. And, going back over, here's the monthly. You can actually see when this started to rocket on the way down. And folks, if you don't believe that structures line up in the charts, and I've talked about them before, that's what the retirement service is based on. When you get structures like this, that's when you get huge declines, right? When you break multiple swing points, multiple time frames, especially on your long-term time frame, you can get huge declines, and that's what's happening here. And that's why the Japanese equity market keeps working the other way, right? Because you've got currency wars and currency devaluations driving their equities up. Okay, so one last thing before I move to viewer questions is over here on the world markets. We do have pretty much a stagnation here. Finally, the CAC has already reached its target. It looks like it's stagnating. If we look at the FTSE's struggling there at the highs, test over, back under. I don't have volumes yet, but I'm suspecting that actually had less volume today. And if I look at the German market does a doji at the highs and it's running out of juice too. Looks to me like Europe's fixing to get some sort of a pullback. Whether that affects the U.S. markets or not, we'll see. That's a negative in my opinion, and something we have to factor in to our final thoughts. But before we get to that, let's take a look at some viewer questions and see what they're thinking here. All right, as we come back here, viewer question has to do with the XLF, and the question is that it's, or I guess more of the observation is that it's diverging from the bonds. And so I put up a chart here to look at the divergence between these two. Bonds are here in the blue, XLF here in the black. And if you pull this back far enough, and we can pull it back, say, a year, and let's actually bring it back 2 years. And if we do that, we can see, bonds made a big push up. When they did, this sells off. Typically bonds go up, this sells off, so forth, right? And so you kind of have this negative effect, even though the relationship, changes over time in terms of the absolutes. When equities, in particular XLF, sells down, bonds are typically going up and vice versa. So if we zero this back in now and look at just the last 3 months, well, you can see again the equities themselves have pushed down the XLF while bonds have gone up. And as bonds started coming down, XLF comes up. Now the XLF's going sideways. Bonds go up, and now they're coming back down. What's happening here? Well, in my opinion, it's nothing more than, you're looking at a time frame that's a little distorted in that you had, the XLF just going sideways, whereas you had bonds kind of trending up. But now the bonds are coming back, XLF still going sideways. The key here is when this breaks, and as I was talking about on the XLF chart, it's set up to break and potentially to break soon. If it does, what I would expect to see is I'd expect to see these equities start heading up, right, and the bonds to continue down. We already have that look on the bonds we were just talking about a second ago, and we looked earlier at the XLF saying that it looks like it's about ready to try to break. If true, you'd be getting rotation into here, right, rotation out of there, and then that relationship, that typically inverse relationship, is probably going to continue on. So I think it's just a pause, and I think it has to do just with, from a neoclassical standpoint, you're coming up to a price point, you can't find enough buyers willing to pay the higher price to get in. Once it breaks, that's where we'll see if in fact the higher prices will be paid to get in, and I suspect they will. And for right now, it looks to me like that's all that's really happening here. Okay, let's pop out of here and come back to our final thoughts. So if we come back to the S&P 500 and take a look at this, we've got this ABCD structure that points up to about 31. We've also got, this large and then a small. Remember, we had a small and a large range. If you project the small range up, right, that projects up to about here. The large range, of course, larger, and that would be the next target. So if you look at this, you've got a target around 1231 or so. You got another one around 1240, and then this big one would actually take you up to about 1280, I think. Not 12, excuse me, 2131, 2140 or so, and then 2180. So, when I look at the structure, it's not complete. All the behavioral characteristics of it so far continue to point higher. We've got two negatives going on. One is the dollar trying to break higher. The other one is equity markets in Europe so extended. If that equity pullback in Europe is slight, in other words, if you work it off in terms of time more so than price, and you don't get some huge decline back to the backside, then I suspect these markets and other markets can continue to try to work higher while Europe takes a pause. So just like we talk about rotation here with the XLI coming on, the XLF coming on, we've already got the XLV doing it, right? That allows those things that have driven us higher to pause while these catch up, right? And that would be the same ideal in the world markets, where one world market leads, then another, right? And their whole ideal behind rotation typically is one sector, or in this case, one market looks cheaper than the other over time. All right, folks, so my thought is that this looks great, right? Market's going to try to work higher again, and it surprises me. I kind of thought we would work sideways more, but it's a bull market right now. And when you got a bull market, you just got to stay with it. You got to keep leaning long no matter what you're doing, and allow it to take you as far as it wants to go. And then we'll deal with whatever it leaves after that. That's it for tonight. Thanks for joining me as always, and have a great night, and I'll see you next time. Take care, folks. Good night.